Good day to one and all. This is Dr. Sivaraman of iknowintersys.com. So I'll be presenting the Asian Session Live Market Analysis webinar today on 1st of July between 5 and 5:30 GMT. I was supposed to give the webinar yesterday because of some other work. I was not able to present it. So I'll be giving the expected market moves for this particular week, 30th of June to 4th of July. So that is the end of the month of June and the beginning of the month of July. So whenever you come across the month gets over in a week and also the new month starts, we know very well the market is known to make some volatile moves. And such volatile moves are going to be opposite of the trending move, what they intend to do it during that particular month. So now you will be able to find out what the players intend to do in the month of July. Anyhow, I will explain to you with the help of the algorithm or with the help of the forecast derived from that of the algorithm. And also I'll try to fine tune the forecast using the market trading technique. This is the expected market moves for this particular week. So it is a month end and the new month beginning time. The monthly trend reversal move is expected to be seen. Market is known to be very volatile. Now already you would have noticed that in the case of Euro and GBP, they gained the levels and also dropped in the case of USD yen and USD CHF. Overall, you come across that USD weakening move is seen in the market. So when the USD weakening move is seen during that of the month end, that is yesterday and today, that is 1st of July, then we know that when the players make the month end and the new month beginning moves as a false move. So they are making the upside move initially. So it shows very clearly from that of the midweek, they are expected to make the slide in the market. So, and this week on 3rd of July, I'll be presenting the review of this forecast on Thursday, that is 3rd of July. You come across in a very peculiar way this time that it is 4th of July, the Independence Day in the case of US, so it is a holiday. So instead, the non-farm payroll is going to be announced on 3rd of July. Besides, the first Thursday, ECB is expected to announce the interest rate and also the ECB press conference. So both are going to happen by 12:30 GMT on Thursday. So the expected market move I have already given here. They are expected to make the slide and also slide after that of the non-farm payroll and the ECB press conference. So then you'll come across more dip and firm up when the slide moves and just small firm up towards close on Friday in order to induce the short covering for that of those who have taken the sell positions after the drop. So that is what they are expected to make the swings in the market in this particular week. So yesterday and today, they are expected to make the high level consolidation of the new gained levels. And then from Wednesday onwards, they are expected to initiate the drop in a big way. And afterwards, on Thursday, they are expected to make further big downward move after the ECB press conference and the non-farm payroll announcement. So they do all the stop-ins before that of the prime data events, and after the prime data event, they try to make the move giving some other excuses or some other stories. So this is what you come across every time in the market. Now, let us talk in terms of the levels, what they could make the moves in the market. Now, as far as Euro is concerned, they are expected to go up to that of 1.37 because it is a month and new month beginning time. and afterwards they're expected to make a big slide. Then in the case of GBP again, from 71 level, it has already gone to 71.14, but probably they may make another brief upward stop and above that of 71.14 to 71.23 or 24, and then start making the slide from that of the European session today. And so they are expected to make a downward move, and further quick downward, unexpected downward move could happen in the market from next week onwards. After that of the non-farm payroll, you could come across market making for the big drops. Before that, the players are gaining the levels and building sell positions. So this is what normally they do it, and they gain the levels before that of the non-farm payroll, which clearly becomes evidential that they are building sell positions. And after the non-farm payroll and the ECB press conference, you come across the market drops, and you will be wondering who is selling and how the market is making such a big drop and things like that. But who will be benefited? Obviously, the players. They have already gained the levels and built the sell positions. After the drop, they are the one going to buy when other traders are selling in distress in falling market. So this is what they do it on every month. So we should not become surprised. And when they show new levels like 1.71 in the case of GBP, and immediately everybody says that it is 2008 level. So after 2008, what happened to these levels? They went up to 2.11 in a quick aggressive gain and then dropped in a big way and GBP came down to 1.38 level. So that is what they try to do it. They quickly gain the levels and build sell positions. If you become bullish and try to buy, then obviously we might get struck with the high level buy positions. But obviously, when you look into the market, it will appear that any level you buy, you will be able to book profit. That is how they create that impression. And that will be for about a few days, 1 or 2 days. And later on, when they drop, if you fail to book profit out of greed, if you try to hold the long positions at a higher level without a stop at entry, then we might get struck in a big way. And again, it has to take multi-year to reach such levels to close it without any loss. So we have to keep it in mind that when others compare it using the chart and say that it is multi-year high, like 2008 high in the case of GBP, don't become bullish. And such statements can make anybody bullish. And then they will think that it is better to buy when they are making a drop. So that when they quickly make another rise, you will be able to book profit. But you'll find that the players drop and hold, drop and hold. And after non-farm payroll, quickly make for the downward move. So thereby, any level you buy, you will not be able to book profit. This is the trap strategy. So they continue to trap the traders that way. They create the market sentiment and act against that of the traders. And so the traders are bound to become bullish and try to, because everywhere across the world, you come across everybody is bearish about US dollar. And normally, when such bearish mood is created, which induces the traders to turn long in other majors. So they don't mind selling at the lowest level and buying at the highest level. So this is how you find the sentiments influence the traders, thereby the traders just ignore the common logic, buy cheap and sell expensive. Instead, they will buy when it is expensive and sell when it is cheap. So that's what happens. And obviously, for such emotional trades, we'll come across the next trap is going to be there. So you find that when you take a sell position, they are gaining levels and inducing you to do the short covering. Okay, we will not be able to estimate what will be the high. From there, they will make a turnaround. Because ultimately, the players, what they do is they look into that of the cluster of stops. So if the traders have got cluster of stops or predominant of the stops around 1.7135 or 7125, then they will go up to that of 1.7130 and hit all the stops, expose it, and keep one ordinary bulk sell order 1.71. It will fill all the higher level buys or the stops. So whenever they go in for a stop and they get enormous liquidity because higher level, automatically the higher level buys emerge out of the stop trigger. So that is the basic idea by which the players gain the levels so that they get enormous liquidity when the stops are triggered at the higher levels. And once they build the sell position, they let loose the market. Afterwards, they are not interested because they know very well when they make a small drop, immediately the traders will buy. Those who have done the short covering or they stopped out, they will think that, okay, it is the bullish market, so there is no point in doing sell and buy trade. Let me go in for a buy and sell trade. So immediately they will think, okay, near the double low, we'll try to buy. So when the next drop comes, they will try to buy. They may book about 20, 30 pips profit. And afterwards, the next drop they will make, and the traders might take position, buy position, and they may show profit. The third time they make the drop and continue to drop. You know that they don't make the hat trick. So what we need to understand is, in such a scenario, over the month end and the new month beginning time, the market is expected to show such big volatile moves or the new levels and things like that. And the only way we'll be able to sustain in such market is using the hedging. If it is hedged, we can book profit in the hedging or keep stop at entry in the hedging and let them gain any level they want. And later on, when they drop and close our hedging with a stop at entry, we'll continue to trade with it of the sell positions. So that at the highest level, we don't buy, and the lowest level, we don't sell. We only hedge and handle the hedge relating to the market. So that, why they are making such big rise? Because they wanted the traders who had not kept the stops during that month end and the new month beginning time. They try to trap the traders who trade without stops. And also, they handle the derivative market. In the derivative market, some extreme levels they would have just written it, like 1.71 in the case of GBP, they would have written it at a very low premium. And also at 1.65, they would have written the put option at the low premium. So what happens when the market goes up, automatically they earn. Those who are writing the options earn, but those who have bet the options lose the money. So that is how you find in the options on the futures market, they show some unimaginable levels as the option writing levels, but they try to reach such levels. And you know that earlier they have been doing it in the case of USD yen. They wrote the options when USD yen was trading around 98. They wrote the options at 76, and everybody was wondering why 76. And finally, they went there and accumulated all the positions, and then later on gained the levels. So that is how these people are capable of writing some extreme levels, and immediately the analyst, in an innocent way, try to compare it because they have got easily the available chart to compare to any year for that matter. Okay, so now GBP is the currency which is compared to 2008 for such high levels. In the same 2008 October, we have seen also 2.11. When compared to that, 1.71 is not a big high. But when compared to that of the previous week's levels, 1.71 looks very high. So that is how the relative comparison is. So when they just gain from that of 1.65 up to 1.71, then you find 1.71 is such a big number. And later on, when they drop to 1.69, 1.69 looks cheap because it is a relative comparison. After comparing with that of 1.67, 1.69, was looking expensive. After comparing with that of 1.71, 1.69 looks cheaper. So when mind goes for relative comparison, then we are emotionally induced to take wrong trades. So ultimately, understand what the players are trying to do during that of the month end and the new month beginning time, and later on trade wisely. When it is expensive, try to do sell and buy trade. When it is cheap, try to do buy and sell trade. They do create the bullish and the bearish fields in the US dollar and also other currencies alternatively. And so it is part of the game. So they also make spreads of about 500 to 700 pips or 900 pips in the event. And I remember that last year before that and all, they used to make in a month later in reversal around 1,100 pips. Nowadays, they are doing only 400, 500 pips. So we should be blessed. And in fact, the market volatility is very less, so that we'll be able to hold the positions nicely and book profit. But only thing is they are doing a prolonged holding and testing the patience of the traders. So we need to outsmart them by developing our trading strategies and the trading ideas. That is the only way to earn money from the market. So they are expected to make the downward move in the case of Euro and GBP in this week. And in the case of USD they come to about 101.25 and they are expected to go up. And in the case of CHF, also from 88.50 to 91 area, they are expected to go. In Canadian dollar, they had done the lower level consolidation with the downward stop in order to gain the levels. And once they go above that of 1.0745, they will be able to make one-sided gain in a very straight way in a short duration. In the case of USD CAD, similarly Australian dollar, now they will try to, they have come up to that of 94.50 level and they are expected to again make a downward move in the case of Aussie, and then we'll come across more downward move coming in the case of Australian dollar. Now let us do the market reading today, how exactly they are going to make the moves during this day. Now in the case of Euro, 1.3688 was the initial low. They just breached it by 5 pips and come down to 1.3683, and the high is 1.3695. So in the case of Euro, they are not done the upward stop, and whereas they have just made a downward move and they are holding below that of the initial low, which is an extended move for 2 hours. And afterwards, during that of the European session start time, they are expected to make one brief upward stop and then start making the slide. So whenever they are making an upward stop during the early or the late sessions, you try to take sell position. If they are doing it during the mid session, you know that it is intentional move. Don't try to sell at that time. So you can easily distinguish. And also the extended moves and the stop-ins are quick moves above that of the high or below that of the low, whereas the intentional move will be a slow pip by pip move. So use that differential instrument and try to find out what move they are doing it, and accordingly you try to commit positions. And in the case of yen, 101.24 is the low, 101.50 is the high. They just breached the high by 4 pips. So you find that they just indicated that they wanted to do the USD gaining move in all. Now, GBP, 1.7103, they just cut it by 1 pip, 1.7102, and 1.7112 is the high. So next stop and we should sell. The USD CHF 88.73, they just breached the high and gone above. 88.70 was the initial high, and 88.66 is the low. They are not breached it. In Canadian dollar, 1.0667 is the low, 1.0675 is the high. They are not breached low or high. And in the case of Aussie, 94.16 was the initial low. They just made a 2-pip downward stop, and before that of the interest rate decision in Aussie by 4:30 GMT, then subsequently they went above that of the initial high, 94.36, and went up to 94.58 and stopped cutting the high, and they are expected to make the slide from here. It's a reaction, 30 pips reaction for the data release. So in all, we find as per market trading, they intend to make the slide. They have done the, or intend to make the USD gaining move. So, but when we understand that they intend to make the USD gaining move, but we should not straight away take sell positions because it is a mid session. Now it is 5:21 GMT. So during the late Japanese or during that of the early European session, when the volume improves and also the spread becomes the high and the low becomes around 40 pips and above, then you try to take sell positions, will be able to quickly put profit. That is the most important thing you have to understand. So don't simply follow any of the technicals and commit positions. Before that, you try to use your common sense, whether there is enough spread for them to make that swing in the market. And if they are not making enough spread, that means they are not interested in taking that particular currency. So for example, USD CHF, they hardly make the moves. And if you try to commit positions without understanding what they are trying to do it, you will be struck with the position. The same equity, if you use it in some other currency, you'll be able to earn about 30-40 pips profit. Whereas if you use it in the wrong currency, which is not making any big headway, then you will get struck with the positions. So identifying the currency at a different time of the day is vital. How? By simply looking at the high and the low, whether there is a spread of 40 pips in them. Only in the case of Australian dollar, the moment you come across spread of 40 pips. So during the European session, when they are making a brief upward move, then you will be able, you can take sell positions there, Aussie and also GBP as well as Euro. And don't commit too many positions, commit only one position at a given time. After keeping stop at entry, you can commit another position so that when the market reverses and make a move against you, you don't hold all the positions making loss. Then that leads to over trading because many of the people are now again entering into the field of over trading. They see some because they have seen prolonged subdued moves in the market when suddenly by month end, when the move started increasing the amplitude, immediately the traders commit more positions as if they are going to grab all the money from that other market during the swings, but they quickly lose their equity. So the aim is to grab all the profit from that other market, but instead they lose all the equity during month end because of over trading. So control your emotions. Don't commit too many positions. Take only one position at a time. And once you are able to keep stop at entry, then you think of another position. Let the market move whatever the way it wants. Let it move as per your expectations. But as long as you have got one position already committed, you try to exit out of that and then go to another position. Don't think that you will miss that opportunity because market continues to give trading opportunity. It's a never-ending process. So this is the basic trading strategy. We try to sell near that of the high, buy near that of the high, buy near that of the low. Intraday, when the low or the high are not breached for more than 30 minutes from the start of the session. So now we come across the new highs, the initial high and the new lows. So you need to watch during the late Europe, Japanese, and the early European session. When the spread increase, you try to commit positions. And as per my market trading technique, it shows that we can do sell and buy trade in the market. And also the forecast says today they are expected to make this slide. And during the year session, they are expected to form up. So use the forecast as a guiding factor. Then do the market trading. Find out what the type of move they are doing it. Then you go in for the trading. Then you will find all trades are making profit. This is what I do it during Tracking the Forex Market Together webinar. What I give it once a month. And this time for the month of July, on 8th of July, I'll be giving the webinar, that is next week. And I'll explain to you how exactly we can follow the sessions using the different timings of the sessions and identify how early in the late sessions they handle the majors and mid sessions they handle the crosses. And also they handle only 2 pairs at a given time where they increase the spread to 40 pips and above. Then later on, we try to commit positions so that we'll be able to make definite profit. And instead of simply taking the positions and waiting for the market to give the profit, you try to look for an opportunity and then commit positions. We'll be able to really make profit. So be an opportunistic trader rather than expecting the fortune to shower every time. So if you've got any questions, you can ask me. And I'll come back on 3rd July, that is on Thursday, and review the market along with the other forecast, what I've given it for this week. And also, after seeing the moves till Thursday morning, Tuesday during Japanese session, I'll be able to give more emphatic information pertaining to that of how exactly they are going to make the moves during that of the non-farm payroll and ECB press conference. Okay, Eric has got a question. Will GBP test the range of 66 to 1.70 this week? USD and also test the range of 100. No, this is actually the range envisaged. But unfortunately, what happened that for the past 3-4 weeks or probably more than a month, they have been just consolidating in a very narrow range of 70 to 120 pips swings in all currencies. So these are all the expectations of the lows. So anytime when they come out of the consolidation, they should be able to reach it. So if they are coming out of the consolidation, we should be able to see it within the week. If they still continue the consolidation, it might be about 50-60 pips. And if it is a quick move, then we might be able to see within the week. And if not, at least in fortnight, we should be able to see such moves happening in the market. Because now you find that yesterday, the second quarter is over. So the players would have just made their fortune by making the USD weakening move in the market and exited out of their positions. So once they exited out of the positions, they have to build the new positions. How they build the new positions? Now, for example, let us take Euro and GBP. Yesterday, they gained the levels. Yesterday, Euro and GBP gained the levels. And what for the month end they have to do? So they buy Euro and GBP, exit out of such positions. Only then, because they are all nothing but the positions. If you hold the positions, it has got the inbuilt profit. Or we can simply say, I am in the money, but not having the money on hand. So once they book profit, they have the money on hand. So for the second quarter, they just got the money in their hand. So once they exited out of the positions, what they are supposed to do? They had to build the positions. So they will not buy here. If they build the positions, if they buy here, then they have to continue to rise the market. If they want to continue to rise, they have to buy at 1.71 and then buy at 1.7150. Only then market will go up 50 pips. Then buy at 1.72. Then it will go up 50 pips. Once they buy like that, their average, what will happen? 1.71 buy, 1.7150 buy, 1.72 buy. Their buy average will be 1.7150. And in the event if there is a sudden calamity happens somewhere in the world, and if the market drops 200 pips, it will be extremely difficult for them to earn that loss. So what they do is it is very easy to drop the market because The players are the one they are rising the market. And if they simply withdraw the support, automatically the market falls. Any level you buy, market is not rising. So automatically you liquidate. Then any level you buy, the market drops. Automatically you liquidate. What happens finally? You decide that market, okay, it is a bearish market. Market is going to drop because no pullback. So immediately everybody started selling. The market falls in a big way. At that time, the players silently buy in small parts. Then later on, those who were sold after the drop realized that, oh, I emotionally taken the sell position. Every sell is being absorbed by the players, so they are not giving for the profit to us. Then the players simply gain the levels and automatically the short sellers come for short covering. This is what happens every time. So we need to understand that the players have got the money in the hand and they wanted to buy back the positions after the second quarter. So to buy, they will drop the market. Then okay, I'll show this slide. Any other question, please? If you got any questions, I'm willing to answer those questions. Okay, Charkir. This week and the next week is USD gaining more. Tomorrow start the falling in. Yes, today itself you will come across some slide and what they set as yesterday's high, they may just retest it and show such highs and start making the slide. Probably about a few pips they may go above that in the case of GBP in order to simply create a bullish feel above that of the high by 10 pips or 15 pips, just to show the bullish feel, and afterwards they are expected to make the slide. And we can be 100% sure in the market they are going to drop because they have just gained the levels and booked a profit with regard to all the buy positions, and now they have to build the sell positions and also they have to buy against the sell positions at the lower levels in order to make the next rise. So in the market, you will never see the continuous rise or a continuous drop. You will be always, you will come across the alternative bout of the rise as well as the drop. And during that of the multi-year trend reversal also, they will quickly gain and book profit and again then drop and quickly gain and book profit. That's how they try to gain the levels in the market. And that needs enormous volatility. And unfortunately, because of reduced volume, the volatility has also come down drastically in the market. So we need to wait for the market to pick up the volatility. And I'm 100% confident that the players are expected to make the slides in Euro and GBP and try to do the USD gaining move in coming days. We will review whether the call has come true by Thursday. So I take this opportunity to thank FX Trade for the facilities provided and also you people who have come here to listen to my webinar. I'll come on 3rd July and try to review the forecast, what I have given it. And there are 2 more questions. So when do you expect AUD to start dropping from? Probably today, we should be able to see the drops coming in. And visible drops could be seen from Wednesday, tomorrow. Now the questions are pouring in. And Otto, how will shorter USD trading week affect? See, that is the Friday. It is US Independence Day. Because of that, the holiday is there in US. But other markets are functioning. Europe and also Japanese market will be functioning. So you'll come across some reduced volume. And in fact, if you watch carefully, most of the days nowadays, you come across more activities during the European session rather than US session. So I don't think that there will be any big change on Friday. They will continue to slide on Friday. Okay, no more questions. So I'll come back on Thursday 3rd of July, day after tomorrow, and try to review how exactly the market is expected to make for the moves. So till this time, you can make use of the forecast and try to trade session-wise according to the expected market moves. Thank you one and all. See you on Thursday.